Hey, moneymakers, welcome back to another episode of Taking Stock Live. I'm your host, Kalila Enriquez Reynolds, and we're bringing you all the latest business news and telling you how it will affect you and your money. So tonight we're going to be taking a look at all of the major, or many of the major banking stocks and discussing their performance. So how has the banking sector been doing? NCB has been in the news a lot lately, but they're not the only banking stock. So let's look at the local banking stocks and their performance. Plus, we finally have a date for Jamaica's general election. September 3 is going to be D-Day. And we're also going to be taking a look further abroad at NVIDIA. Very interesting stock by the guy who first told us about NVIDIA on this show a few years ago. But before we start, don't forget to hit the like button, subscribe to this channel, and share with a friend to tell them that Taking Stock is on and live, and we are about to talk all things money. And also, let me know in the chat what part of Jamaica or what part of the world you are joining us from. I love to see my money makers all over the world. Now, come on, let's get this money. On this episode of Taking Stock, how have Jamaica's top banking stocks been performing this year? And what can we expect going forward? We'll discuss. Then the analysts weigh in on the latest market developments. How will Guyana's upcoming election affect the country's economic development? We'll discuss. Jamaicans will head to the polls on September 3 for the 2025 general election. The ruling Jamaica Labour Party is seeking their third term in office, while the Mark Golding-led People's National Party is looking for its first term in almost a decade. Nomination day is set for Monday, August 18. In the 2020 general elections, the JLP won 49 of 63 seats to form the government. By-elections in 4 divisions of the Kingston and St. Andrew Municipal Corporation are also scheduled to be held on September 3. Meanwhile, Jamaica's government says preliminary negotiations have begun with JPS to review the company's utility license. Energy Minister Darrell Vaz announced in July that the government would not be renewing JPS's license under the contract's current terms. Prime Minister Andrew Holness revealed last week that the renegotiation has begun. He said the talks have been fair so far. Minister Vaz had previously said the government was open to applications from other providers. High electricity costs have been one of the island's greatest barriers in manufacturing for decades. Guyana is one step closer to producing 1 million barrels of oil per day after collecting the first barrels from its 4th offshore development. Officials said the One Guyana site is the country's largest production site to date. It's expected to produce roughly 250,000 barrels of oil per day. This will bring the country's total daily crude output to more than 900,000 barrels per day. Guyanese authorities said oil produced from this site will be marketed as Golden Arrowhead crude. ExxonMobil Guyana said it expects to have a total production capacity of 1.7 million barrels per day from 8 developments by 2030. OpenAI, makers of ChatGPT, recently unveiled the latest version of its AI chatbot, GPT-5. According to the company, this latest model can provide PhD-level expertise. OpenAI boss Sam Altman said GPT-5 is smarter, faster, and more useful, and will usher in a new era of ChatGPT. He said the new model will suffer from fewer hallucinations, which is the phenomenon where large language models make up answers. On the other hand, some users have said that despite its impressive advancements in logic and efficiency, the update sacrifices the creativity, flexibility, and user-centric design of previous models.
What's Hot was brought to you by JMMB Group, your best interest at heart.
You don't need to be a financial expert to get your money right. That's why I created the Money Mission Workbook. It's for people like you who want to finally get clear on your money, make a solid plan, manage your debt, and even start investing for the future. Everything you need is in one place. If you're ready to level up, this is where you start. Head on over to Amazon.com to buy now. The link is in my bio. Let's get this money. All right, welcome back, and let me see who we have joining us. Big up to Learn, Grow, Invest community who says he loves this topic. Ooh, Worrell also said that this is going to be an interesting one. Dwight from Spanish Town is in the house. Adrian is checking in. We've got Worrell checking in from Montego Bay. Kish checking in. Sheldon is saying hi from Kingston. Tavares is in Timbuktu. Orlando is in Grange Hill. Antoinette is in Black River. We've got the Diplomat. Says NCB's coming back to life, and he's checking in, or she, from ATL. Kish is in London. Scotty just reached. Life Roots is in Montego Bay. Bounty Lad is straight from Kingston 11. We got Philip in TCI, and Craig bigging up himself, big up yourself, in Spanish Town. Roswell also joining us from Unity Hall this evening. All right, so like we said, banking stocks are in the news lately. There's been a lot of talk about some of the banking stocks recently, so what better time to do a deep dive into their performance? And joining us tonight to give his analysis on banking stocks is founder of Wealth Watch JA, Julian Morrison. Welcome back to the show, Julian.
Hi, Kalila. Hi, everyone.
Great to have you. All right, so what banks are we looking at tonight, and how have they been performing over the past year?
Okay, so I have a sample, and I'm looking at NCB, JMB, Scotia, and Sagicor. I'm going to share my screen just to make life easier for everyone. Can you see?
Yes.
I'm going to zoom in.
I was just about to ask you to.
We've been through this enough times.
Right.
Yeah. So now we're live. So what's the significance of looking at all these ratios?
You can zoom in more, you have more space.
Sure.
Yeah,
I just put them all in bold to make life easier too.
NCB, JMB, Scotia, and Sagicor.
Yeah. So what's the importance of looking at all of these ratios? At the top, we look primarily at how these banks are managing their capital. And capital is very important to banks because just the way raw material is important to distributors or goods manufacturers, capital is a raw material for large banking conglomerates. So the key is to understand how that raw material is being managed. Now, what we try to look at as a proxy is the equity to asset ratio. How much of the asset base is made up of equity? And this is equity attributable to shareholders. And what we try to analyze is for each dollar of assets, how much of that is made up of equity? Because assets are made up of equity and liabilities. I hope everyone remembers that from accounting class. But how assets are funded is critical to understanding the financial health of an institution. Now, there has been a lot of talk about NCB and NCB turnaround and the bull case for NCB. But before that conversation can be framed, one, we have to compare all institutions or all opportunities to comparable opportunities, number one. And number two, we can't look at price in a vacuum. We have to ascertain if we're getting value or not. So the key to understand this is to know that for every dollar of assets, there's 7 cents or roughly 8 cents of equity being funded. Or it's funded by 8 cents of equity. So every dollar of assets, 8 cents is being funded by equity. And that's similar for JMB. So they have a similar risk profile as it relates to the funding mix. But as it relates to Scotia, for every dollar of assets, $20 is funded, 20 cents, sorry, is funded by equity. And for the case of Sagicor, for every dollar of assets, 16 cents or roughly 17 cents is funded by equity. So what we begin to understand is that the risk profile in terms of the funding mix is totally different. And just for the purposes of transparency, I don't hold any of these stocks. I'm actually taking a step back from banking stocks right now. I have for a few years now, I have recommended opportunities outside of the sector. But for those who want to take a look or who already have those holdings, I wanted to give somewhat of a comparative analysis. The equity to assets, the assets to equity, sorry, in the following line is the same thing, but it is inverted. So it's looking at it from another perspective. So you're looking at it from the standpoint of a multiple. So how much greater is asset relative to equity? And in this case, for NCB, it is 12.58. So assets are 12.58 greater than equity. And for JMMB, it is 13 times. For Scotia, it is 4.9 times. And for Sagicor, it's roughly 6 times. And just to go back to equity to assets for a bit, typically the benchmark for this ratio is 10%. You don't want to go below 10%. So if you find that less than 10 cents of your assets are funded by each dollar, um, sorry, if you find that the ratio is off by less than 10%, it means that your funding mix is out of whack and it needs to be corrected as soon as possible.
So
But we
that's
have
for the second one. That's for assets to equity.
that's for no equity to assets.
For the first one.
Yeah, you don't
Oh,
want
bring
to
up
go
the.
below 10%. They
Okay,
call it the
so
tier one. They call it the tier one ratio.
okay, so we're looking at NCB and JMMB having ratios below what is ideal.
Correct. It can happen for short periods of time because of circumstances that may not be ideal. So it's very important to track these things over multiple financial years. But if you have 3 successive financial years where tier one capital is less than um, 10%, then it means that you have a serious issue. It means that you need to raise equity very soon to balance it back out, which is why we would have seen NCB attempting an APO last year. This would have given us some perspective around why that equity raise was attempted, because
Mm.
it's a matter of balancing the asset mix. You don't want to have too much of your assets funded by liabilities. So you don't want to have each dollar of assets funded by less than 10 cents. But in the case of NCB and JMB, that is the case. So you
So these
notice
numbers here are for what period of time?
these are for the respective periods that are the latest on the Jamaica Stock Exchange.
So it's
So
for
for
one
instance,
one year.
all the numbers are annualized. So yes, they do reflect the performance of a year, but all of these are the latest figures. So for example, JMMB's latest would have been their audited for March, the period ended March 2025. For NCB, it would have been the period ended June, um, etc., etc. I think Scotia was April and Sagicor was also June. So these are the latest numbers that are up. So all these ratios are based on the latest data that's on the Jamaica Stock Exchange right now. Um, the next area we want to look at is the loan to deposit ratio. Um, how much how much of the deposit base is actually deployed in loans? Because again, deposits are the raw material for deploying loans, and loans generate interest income, or what is more important, net interest income for these institutions. Major line item for performance. And as we notice, Scotia, their loan to deposit ratio is 63.4%, um, and Sagicor is 48.9%, and NTD is 77.6%, while JMMB is roughly 96%. So it means that it shows you how much more can be deployed by these institutions in terms of lending, and it also gives you an idea of how aggressive the lending policies have been. Um, I'll just say that the numbers speak for themselves. So it's not enough to just look at the price of these companies, but
So
to also look.
is it ideal to have the higher the number, the better?
The higher the number is, the higher the level of aggression. So it means that the deposits are being put to productive use. If it is at 75%, it means that the bank is um, at a point where they don't need to be concerned. They are pretty much being productive with the deposit base, with the deposits that they have on hand. But if it's a case where it's above 90%, then it means that they need to probably relax their lending policy. Um, well, not relax it, become more conservative with their lending, or look to buttress their deposit base relative to the loans that are out there. Because pretty much, if it was a bakery, you'd be running out of flour. So the deposits is the flour and the bread is the loan. You need deposits to generate loans, and you need to be able to manage your raw material, which is the deposit. So the key is to understand how much risk the institution is taking and how much more capital, which is raw material, they have to actually enable further growth. So this also shows the growth capacity of the institution, how much more can they grow. And as I notice, Scotia has a lot further to go, and their capital base is healthier based on their funding mix. They can afford to take on more debt. They can afford to be more aggressive if they need to. And if you remember, about 3 years ago, during the pandemic, when the other institutions, some of the other institutions, were focused more on just generating higher margins and greater profitability, Scotia sacrificed that to focus on their capital base, and now they are benefiting from that sacrifice.
But for
So,
Sagicor, why is it so low though?
well, to be honest, Sagicor isn't as dominated by its banking assets as the others. The dominant asset in their asset mix is actually the insurance company. So that is why we would have seen a difference, because the crown jewel in Sagicor is the insurance company, while the crown jewel for Scotia and NCB is more so the bank for those respective companies. So a lot of it has to do with the structure of the company and what generates most of the economic value from that standpoint. But they are a major contender, which is why I included them in the exercise. Um, so NIM here is a net interest margin, and it's basically the net interest income divided by all the assets that generate interest on the balance sheet. And the net interest income is pretty much telling you what spread the the institution is getting from its assets. So banks have to borrow, and they have to unlend that money. So they borrow at a certain rate and they lend at a certain rate to get a profit. And the difference between the rate at which they borrow and the rate at which they lend is called a spread. And that spread has to be contextualized not just by the two rates, but how much is that profit relative to all of the assets on their balance sheet that can generate interest. So what is the yield? What is the yield from all the assets that they're generating? So right now, NTB has the highest net interest margin. That's not surprising because they have always been more aggressive in terms of generating yield. Um, right now, NTB is at 3.64, GMMB is at 2.1, and Scotia is at 2.25. So I think in terms of risk relative to generating a risk-adjusted return, I think Scotia is in the best position because they have an asset mix that is superior to NCB, but their net interest margin is not that much lower than NCB. So they've managed to have the best of both worlds. So these are some things that we can use to compare financial institutions. How much risk are they taking and how much of the spread are they taking while they're taking that risk? Another area to focus on is the operating efficiency ratio, which is the total operating expenses divided by revenue. Um, right now, the company that is doing the best. I mean, the lower the number is the better it is. So Scotia is doing the best, while JMMB is doing the worst in terms of efficiency. I remember back in the day when Patrick Hilton was running NTB, that was his favorite word: efficiency, efficiency, efficiency. So the key is to ensure that efficiency is as low as possible, because it's basically your cost to income ratio. So how much of your revenue is actually making it to the bottom line? That is what this ratio is looking at. And finally, the number that everyone loves, net profit margin. So net profit margin is the highest for Sagicor right now, followed by Scotia, then NCB, then JMB. But what we need to remember about NCB's latest figure is that they got a one-off $15 billion gain from the sale of a subsidiary. If that $15 billion was actually removed, and we'd have a more of an adjusted result or a normalized result because it's a one-off. You're not going to sell a subsidiary every day, which is why we say it's a one-off. We would have gotten a materially different result. The net profit margin would have been in the single-digit territory. So again, we can't look at one-off results as a explanation for a turnaround to say, okay, an institution is out of the woods. Is it that we don't have to worry anymore? Or do they have more work to do? It's good that they generated more profit, but how profit is generated is actually very important. And with this asset mix, selling a subsidiary for $15 billion isn't enough to turn around their situation, as you can tell, because you're supposed to be at 10% or higher. Now, in terms of the valuation, it begs the question now, is the valuation justification for where it is from a risk standpoint? So is a PE of 5 low enough for the level of risk that we're seeing coming from NCB, for argument's sake? Meanwhile, Scotia, their PE is below 8, but you're getting a capital base that's superior. And what's the important thing about having a superior capital base?
Let's backtrack a little bit. Backtrack a little bit on Julian. So for the newbies in the house who don't know what PE is,
Okay,
let's just go over that a little bit.
Right. So these two at the end, they track the price relative to the earnings, meaning the net profit after tax per share. So pretty much you want to pay as little as you can for something that is as valuable as it can be in the relative circumstances. So what do I mean? You want to look for bargains. So typically speaking, lower PEs mean that you're getting a bargain, all else being equal. No, it's not a given. You can buy something for a low PE and the price doesn't move for whatever reason. We call that a value trap. So you buy something that's cheap and you get no upside, you get no profit on it. So it's important to not only buy cheap, but to buy cheap in assets that actually have upside. They actually have promise. They have what is called a catalyst. There's a driver behind it. There's an engine behind it to produce the returns. And as you can see, based on the net profit margin, Scotia has the second highest net profit margin. They have the second lowest PE, and they have the strongest capital base. So it means that the balance between valuation, the quality of the assets in terms of how it's funded, and their track record so far, they're in the best standing. So it's not enough to just look at the price and say, hey, this price went up X% in 2 weeks. But how is an asset performing relative to its peers? How much risk are they taking? What's the health of that company in terms of its balance sheet? And also, what price am I paying for that same company? The next one is price to book. So the book value is just the net worth of the company. So you're looking at it strictly from a balance sheet standpoint. The book value is shareholders' equity, or the net worth, so assets minus liability. And the book value per share is the equity per share, or the net worth per share. And the net worth per share is not always the price per share. So some industries are friendlier to book value than others. book value is very popular in assessing financial institutions because, again, it's capital intensive. A lot of what makes banks work is carried on their balance sheet. So we use book value as an assessment in analyzing valuation for these kind of stocks. So pretty much you shouldn't really be paying more than 2 times book value for a financial institution like these. And they're all below 2. So is it that they're all worth buying? That's a philosophical question. So we need to look deeper. Not only is it less than 2, but is it less than 2 and is it generating an attractive return on equity? Is the net profit margin attractive? Are they managing their expenses well? And are they funded in a way that can generate sustainable dividends? Because what the equity to assets ratio tells us is their dividend capacity. If your equity to assets ratio is too low, it means that you're going to struggle to pay dividends because too much of your cash resources are going to be gobbled up by liabilities. That's why we also look at the equity to assets ratio. So when we see equity to assets in the double digit territory, what it means is that the company can comfortably pay dividends in a way that is sustainable. They're not going to pay the dividend as a one shot, but they can maintain what is called a dividend program. So if it is that the dividends are usually quarterly, they can satisfy the quarterly payment in a way that is stable, predictable, without having to make a release to say, oh, we're going to have to skip the dividend this time around, whatever the case may be. So that's why we're so concerned about the quality of the balance sheet and the capital and how the asset base is funded, because it ties back into something we love so much as investors, which is dividends. So everyone knows that Scotia has been on my watch list. I hope tonight the reason for that is made clearer. I have a bias for that reason. Currently, I don't hold it, but I think it's a superior choice on the list. But if an investor believes that NCB is a buy at half its book value, I won't fight that thesis. That's a perspective, but it just doesn't float my boat. I don't think so because again, having an equity to assets below 10% for multiple financial years and trying to raise capital all over the place, that doesn't speak that doesn't speak to me from an opportunity standpoint, meaning that it's very likely that there could be trouble down the road if there's an external shock. What if the US economy has a shock and it pulls down Jamaica and we go back into a recession? Because most of 2024 was a recession. We had 3 consecutive quarters of contraction. And even right now, NCB is having a significant increase in credit impairment losses, which means that there are more persons defaulting on their loans that are held within NCB, which is also a risk factor. Those things affect your dividend capacity because you need a cushion to absorb those credit impairment losses. I know this is a very technical conversation.
It,
So
it
I think,
is, but so
yeah, I
and
know.
the viewers still have a lot of questions for
Yeah,
you.
banks are
But
complex,
before
but
we get to the questions,
yeah.
give me the summary version. So if you were to rank these 4 institutions 1 to 4, 1 being the best, how would you rank them?
Actually, three would be NCB, and I'd
Mm.
put JMMB last. Just based on the basis of the valuation relative to the quality of their capital or their balance sheet, I think that this is a proper ranking.
So
And it's
Scotia
subjective.
first, Sagicor second, NCB third, JMMB fourth.
Yeah, yeah. And this is subjective. This is subjective, not a knock to any institution. Um, I am a fan of JMMB for different reasons. I am a JMMB customer. Let me just put all of that out there because I don't want anybody to call me or message me. Um, I have nothing against JMMB. I'm just looking at the numbers. And if I had to ration my capital as an investor and I had to spread my capital across the sector, this is how I would do it. It
And
would be
notice
in
I
its
didn't
order
say
of
first to
precedence.
last. I didn't say first to last because there's some other financial institutions that weren't included.
Yeah, definitely,
You
definitely.
have First Global Bank, you have CIBC, for
Yeah.
example. All right,
Mm-hmm.
so let me take some other questions.
Yeah.
D wants to know, is it that they could deploy more, or is it they aren't getting enough viable candidates for the loan products?
It can be a mix of both because of a competitive market, but it has a lot more to do with the former than the latter because there are so many loan applications that are refused. Even within the context of business loans, there's so much business that's turned away in the underwriting process. Um, Jamaica is still a society that's fairly unbanked. Our financial inclusion is below our developed country counterparts. So I would argue that it is more the former than the latter. But competition is a factor for sure.
Nigel wants to know, does NCBFG's ownership of Guardian Holdings make any difference?
Definitely. Um, Guardian is a major aspect of why their net profit margin is not worse. Let's put it that way, not worse, and why the efficiency ratio is not worse. It's actually It's becoming NTB's crown jewel. So every company or every group of companies, especially conglomerates, they have what is called a crown jewel. It has that asset that is their center of gravity. It's their star player. It's what drives the performance. And in recent years, it has become more and more leaning towards Guardian. So yes, Guardian does make a big difference. But there are some other subsidiaries that seem to be undercapitalized, and the undercapitalization of those subsidiaries biases the undercapitalization of the group. So if I have big assets that are undercapitalized, it means that the overall group is going to be starved of cash because you're going to have to channel so much more of your cash resources towards those big assets that are not doing so well, despite Guardian's performance. So, yeah,
Roswell has an observation. She says JMMB is banking on Sagicor's earnings with their 23% stake in the company, but cross investment doesn't always benefit profits if the other company doesn't do well.
definitely. I think the investment in Sagicor parent was the timing of it was unfortunate, definitely. Even but from a risk standpoint, you see, because it's carried at market value, every time Sagicor parents stock price drops, it also affects them because they carry it at market value. Um, so it's not just a profit, it's not just a profit contribution, but also the performance of that respective stock price. Because of that, you have a double-headed dragon, and it's very risky. The size of the investment is huge. So if the size of the investment was smaller, it would have been bad and not so bad. But based on the size of it and the double-headed dragon that I mentioned, which is the stock price and the actual profit, it's kind of tricky.
Last question I'm going to take is from Philip. Doesn't the money gained from the sale of the subsidiary remain on the balance sheet?
Yes, yes, it does. But remember that NCB is about to pay a dividend, and some of it would have come from the sale. Um, oh, I get what he means because it's being sold from one NCB related entity to another. So you're asking if that gain is real or not from a cash standpoint. Um, I haven't interrogated that enough, but from my understanding and from what I know and from what I've seen, it wouldn't be reflected totally in cash because it's just moving from one part of the group to the other. So you haven't created new value. It's really just moving the 15 billion from one area to another.
All right, so we're going to leave this conversation here for now. We have other things to discuss after the break, but it is also election season. So Prime Minister Andrew Holness has announced the date for the election. September 3 is going to be Decision Day Jamaica. Guyana's elections are also coming up on September 1. They have a fixed election date, so they've been knowing their date. We just found out our date on Sunday. So it's time for tonight's poll question. And I'm not going to ask you about who you're voting for, maybe next week. But this week, will you be voting in Jamaica's upcoming general election? So I want to know about voter enthusiasm or voter apathy amongst the moneymakers. Will you even be voting in Jamaica's upcoming general election? A, yes, it's my civic duty. B, nope, I don't get involved in politics. C, I'm not sure yet. So that's a maybe. Or other, leave a comment. Will you be voting in Jamaica's upcoming general election? You can take that poll on Twitter, on YouTube, or in tomorrow's email, or just leave your comment in the chat and let us know. Will you be voting in Jamaica's upcoming general election? Up next, we've got your market recap, and Julian is standing by for the analysts.
Market Recap is brought to you by MyMoneyJA, the official data partner of Money Media. The JSE Combined Index was mostly flat last week. 126 stocks traded across the main and junior markets for the week ending Friday, August 8, 2025. 39 made gains, 66 lost value, and 21 stayed the same. 108 million shares changed hands on the Jamaican dollar market, valued at $483 million. Indies Pharma was the week's most traded stock, with 33 million shares changing hands. It started the week at $2.73. The stock was also the week's biggest loser, down 20%. Transjam traded the second most shares. It opened Monday at $3.66, up 2%. And Derimon rounded out last week's most traded stocks. Now let's see who had the biggest gains. KLE Group was the JSE's top stock, up 38% to open the week at $1.09. ISP Finance was the week's second biggest gainer, up 17.5%. And Cygnus Real Estate JMD rounded out the top stocks, up 16%. On the losing side now, Palace Amusement was the week's second biggest loser behind Indies Pharma. Palace lost 18% to start the new week at $1, and PBS 9.25% perpetual cumulative USD fell 15%. Over on the Trinidad and Tobago Stock Exchange, the composite index was mostly flat last week. Point Lisa's Industrial Port Development was the TTSE's most traded stock. It opened Monday at $4.06 TT. LJ Williams B Shares was the TTSE's top gainer, up 11%. And on the losing side, Guardian Media fell about 12% to open Monday at 75 cents TT. Over in the U.S., the Dow Jones gained 1% last week, while the S&P 500 gained about 2%, and the Nasdaq was up 3%. At the pumps, gas prices rose $1.62 last week, while the cost of regular diesel fell $2.94, and low sulfur diesel dropped $2.54. In foreign exchange trading, it took an average $161.26 Jamaican to purchase $1 US last Friday. That's 1 cent more than the week before. $1 Canadian cost an average $118.49 Jamaican. $1 British pound cost $215.68 Jamaican, and you could buy €1 for $187.65 Jamaican on average. Finally, on the crypto markets, Bitcoin prices gained about 5% over the past 5 days, trading at $120,225 on Monday. Meanwhile, Ethereum climbed another 18%, trading at $4,343 on Monday. Market Recap was brought to you by MyMoneyJA, the official data partner of Money Media.
Subscribe to my newsletter for money news like this straight to your inbox. Go to getmoneynews.com to sign up. The link is in my bio. Let's get this money.
This segment of Taking Stock, The Analyst, is brought to you by JMMB Group, your best interest at heart.
The views expressed in this segment are not necessarily the views of Money Media. This information is for educational purposes only and is not intended as financial advice. Please consult a licensed financial advisor before making any investment decisions.
Welcome back. Let me take some of the comments. Some of the responses to the poll question which was, will you be voting in this year's general elections in Jamaica? A, yes, it's my civic duty. B, no, I don't get involved in politics. C, not sure yet. Or other, leave a comment. So let me see what you guys are saying. Shani B says maybe. Demetrius says A, yes, it's my civic duty. Rasheen also says yes. Raquel says yes as well. Shani is a maybe. Sheldon is a nope. Sean is also a nope. Garfield is a no. Day and Night Construction says yes, I will be voting. So take that poll over on Twitter, in the community section of YouTube. We have the email going out tomorrow morning, so you can subscribe at getmoneynews.com and continue leaving your comments in the chat. Now let's welcome back Julian. Julian, where are you at? There you are. I never forget when you told us about NVIDIA probably 4 years ago, at least three to 4 years ago. And then the stock just went on to be one of the biggest things ever. And so now NVIDIA has climbed to about 8% of the S&P 500, which is the biggest share of any single company. Ooh, give us the details. What does all that mean? What should we?
Well, we can assess the pros and the cons. So on the pro side, it's very liquid. It's a stock that's heavily traded. So if it is that you want to take some options, you want to trade options on NVIDIA, it's very easy to build an options position in NVIDIA, because it's hard to build an options position in a stock that's not liquid. So that's one benefit. So let's say the stock is trading at 150, but the option is $20, $30. You can get exposure to NVIDIA at a much cheaper cost by buying the option instead of buying the direct stock. So in investing, you can take direct exposure by buying the stock itself, or indirect exposure either by investing in an index that has a stock in it through an ETF, or you can buy an option, which is an asset that's tied to what is called underlying. It's called a reference asset. So in the US market, this is very common, and that's a possible proof for you. However, the drawback is that with a stock that is trading so richly and has rallied so much in a short space of time, it means that the valuation could be stretched. Now, the earnings has grown significantly and has kept the valuation within range with other tech stocks. It's not significantly out of whack relative to its sector. However, it might be time to take some gains, take some money off the table, and to go in a different direction. Maybe another semiconductor stock might be of interest to an investor who wants to stay exposed to semiconductors, or they might want to go into another sector to diversify the portfolio and bring down the risk. Because the key is, again, to not just look at how well the stock has performed, but to ask yourself, how much runway does the stock still have at its current pace? Is it that there's going to be a pullback? I believe that there's going to be a pullback at some point. Investors will start to take gains at some point, and sometimes that can be very ugly. The downside can happen in a short space of time, and there can be big drops, and they can be sudden.
And that's the
Because
thing. So is
yeah,
it even sustainable, NVIDIA's success? Because they're not the only player in the game either. So we've started to see so other players gaining traction in the chip making market.
for sure, and there are other players that are emerging that we might not have even heard about. But what's special about NVIDIA is its size. They have a very strong balance sheet with a lot of cash, even though they have been deploying that cash. NVIDIA has become a specialist because they actually don't make the chips. What NVIDIA does is design the chips and program them. So let's say the production process has three steps. So step one is to design the chips. Step two is to have the chips manufactured, which is done by Taiwan Semiconductors, and it is sent back for programming, which is stage three. So pretty much NVIDIA, this focuses on stage one and stage three. They don't do stage two. And they have done that to manage their profit margins, to keep production cheap, as opposed to doing them everything themselves. Um, Other opportunities in the semiconductor space include AMD and also Texas Instruments. I've been keeping my eye on Texas Instruments. I'm a Texas Instruments, um, not necessarily an enthusiast, but I've been a fan of theirs, a customer of theirs. I use their products. I've had to use their calculators and electronics. They make robust products. They've been around for a long time. But many persons only know them as calculator manufacturers, but they make chips, which go into the calculators. And they also make chips for weapons. They make chips for defense systems. And
Oh,
that in this geopolitical climate, it's very important to be positioned in companies that can benefit from armed conflict because missiles and other weapon systems require chips, and some of those chips are made by Texas Instruments. So, to bring it back into context around the NVIDIA conversation, it's not that it's time to sell totally, but it may be time to sell partially. Take some gains and to move in another direction and to look at other opportunities because of how far Nvidia has come in a short space of time. There could be possible downside, and that downside could be significant and very sudden, like what we saw earlier in the year when the US market was very choppy. That could happen very soon because the larger Nvidia gets relative to the rest of the market means that the market is becoming more and more sensitive to the move in Nvidia. So if Nvidia is now the largest asset on the S&P 500, it means that whatever happens to Nvidia is going to affect the S&P 500 index to a greater and greater extent.
true, true. So
To
a few
do
comments here. Phil says NVIDIA has no real competition, not for a long time. And then we have D, who wants to know, would Texas Instruments be considered a sin stock? I guess because of their involvement in war manufacturing.
no, they just make chips. They just make chips. I think defense systems is just one segment for them, but I don't believe that it would be a sin stock. Sin stocks tend to be more entertainment driven or tend to
Alcohol,
be more
tobacco,
juvenile vices. Yeah, for sure.
alcohol, tobacco, gambling, that type of thing.
Right.
Daniel says the US government has given artificial intelligence giants NVIDIA and AMD the green light to sell some chips to China in exchange for a 15% cut of the revenue. So there's that development.
Yeah, for sure. That is a major factor, but I'm not worried about earnings growth for Nvidia because Nvidia is, put it this way, it's not as though it's reaching the end of its growth trajectory. It's just entering a different phase of growth, and that new phase of growth that it's entering is not yet at the mature stage because from a macro level, more and more devices are going to need more computing power. So devices that didn't have chips before are going to require chips, and devices that had chips before are going to require chips that are more powerful. And
Right.
many of those chips are going to come from NVIDIA. So
Yeah, we see
I'm not worried about any growth
GPT-5 is out now.
for sure.
And Sam Altman says that isn't even the most advanced version that they have. That's just the version they're launching now.
Yes, it's early days yet.
They're
And
very early.
in,
It's moving so fast.
in my opinion, the best way to get exposure to AI is through chips. So I believe that investing in NVIDIA, I mean, an investor that has it already would have a different assessment to make than an investor that doesn't have it at all. Because just taking that position would be a different assessment than saying, okay, I've held this thing for 5, 6, 7 years. Is it time for me to take some gains and rebalance? So again, it's just a matter of perspective and where you sit, but it's still early days yet for NVIDIA. And the question is, do I take exposure directly by buying the stock, or do I buy options, or do I blend it? Do I take most of the exposure through options and then the rest in the stock so that my money can stretch further? Because you might not be able to spread your dollars as far just by buying the stock directly. It might be cheaper for investors to actually look at options as a way of getting exposure. So I'm not saying I'm not giving investment advice. We're just talking
Mhm.
about strategy and possible avenues investors can take if they have that risk tolerance. And after speaking with a licensed financial professional, but again, we're just assessing the different roads that investors can take. But now it's getting a bit risky because of the dominance of it. Um,
Right.
if you hold pretty much, if you buy an ETF, if you buy S&P 500 ETF, you pretty much have NVIDIA in your portfolio already. So adding a direct exposure to NVIDIA is increasing that by so much more, pretty much. And you don't want the portfolio to be too skewed to any one asset.
Got
So
it.
that's a broader discussion
I
and a
mean,
broader
think of
perspective.
the comparable discussion would be when NCB not too long ago was a huge chunk. It still is. It still is one of the top in terms of weighting on the Jamaica Stock Exchange. But
For
what
sure.
happened when NCB stock price fell dramatically, and
It
because it
brought
was
down the
heavily,
index.
exactly so heavily weighted, it brought down the entire index.
Yeah.
So that's the concern. Understood. Now let's bring the conversation back locally, Julian. You heard our poll question was all about the election, asking people if they're going to be voting in this year's general election in Jamaica. In the US, when there's an election, there is always a consideration about, okay, how is this going to affect stocks? How are investors going to react to an election? Does that happen in Jamaica? Do you see stock market moving one way or the other based on what is being discussed on the campaign trail or which party comes to power?
From my reading, I have seen literature that implies that the party, there is a stock market response to the party that wins. Do I think it is dominant? No. Do I think it's material? No, because especially in the last couple of years, I would say the last 12 years or so, we have had a greater degree of policy continuity between parties. The positions of the parties used to be more radicalized. So I can see where there would have been a greater sentiment effect because of the more divergent policy approaches before and the lack of continuity. But now that we've matured politically, it would be a different paradigm. From a policy perspective, and this is just me speaking as a layman, never mind the color of my curtain. You say I have the color of the shirt to balance it out, so nobody can say, my surroundings are biased in the
It's
discussion.
Jamaica colors, man.
Yeah, man, for sure, Jamaica. um, I do believe that the country is going in the right direction because of the focus on transportation. And transportation is something we sometimes take for granted, but transportation is something that materially drives economic growth because persons who cannot show up on time can't be productive. Productivity begins with movement. And if it is that most of our labor force does not drive, it means that being able to mobilize these persons is a major driver for our productivity, which has been an inhibitor to economic growth in Jamaica. We've had a serious productivity problem. We have a congestion challenge as well. Now, just from a perspective of looking at buses, it takes 8 taxis to mobilize the same amount of persons that one bus can mobilize. So it means that if more buses are on the road, it means that just from a probability standpoint, there's likely to be less congestion because you don't need as many taxis to mobilize the same number of persons. So more buses is actually better for motorists. It's better for fuel consumption, it's better for commute, and it can also be more structured in terms of management of traffic because we already know how taxi drivers operate in Jamaica. Unfortunately, they are a law unto themselves. So that's one perspective. The second perspective is the government has started a program of cutting taxes. So there was a review of GCT done. There's a review of import duty that was done, and there's talks of other reviews to taxes in order for Jamaica to become more tax efficient and to attract more capital. We want to see the government build on these gains and allow Jamaican citizens to keep more of their dollars in their pocket so they can actually spend it back in the economy. But one big move I'd like to see is a reduction in PAYE. We need to reduce PAYE and focus more on GCT so that we can have a more equitable tax system. Because what do I mean? If persons actually have more of their income to spend, that income is actually going to go right back into um, goods and services, which generally carry GCT, and that's going to fund the tax base because our spending on taxes is the government's revenue. And everyone pays GCT, but not everyone pays PAYE. So by shifting away from PAYE and focusing more on GCT, we capture a wider net in terms of taxes. So that's one direction I'd like to see us go in. There were some other announcements made that I think are promising, but I want to see how the debates play out so I can
Mm-hmm.
have a more balanced view of what each side has to offer. But I do think we're moving in the right direction. I just think we need to be more aggressive with taxes. And oh, yes, there were some announcements around housing and how the number of housing units is going to increase. But one thing I'd like to see us improve in Jamaica is zoning and how we can implement our zoning laws so we can have development that is less chaotic. Because if you look at Wellington in Kingston 6 near Mona, you're seeing a lot of high rises. And it's not that there shouldn't be high rises, but I don't think Wellington was designed to have so many high rises so close to each other in terms of the density. And yes, there's going to be development and modernization, but can the corridors, the surrounding road corridors, manage the
That's true.
population density that's coming in? Because
That's
that's the
true.
thing with infrastructure, it's interconnected. The roads, the sewage, the water, it's all connected. So how can we get zoning laws that are more appropriate to the area so we can have more affordable housing and have a better quality of life? There's no point in living in Kingston 6 if we can barely get to and from because of the traffic, and you have water lockouts because the infrastructure can't support the number of developments in the area.
Yeah, yeah, it's so true. I think the other major election issue, Julian, is usually crime. That's a major one that both parties always campaign heavily on what they can do to bring down crime. And notice that the Jamaica Labour Party, well, the government announced a couple months ago that murder rate was down by 30%. And for us in the business community that follow it, crime is a major hindrance to productivity. And it also increases costs from a business standpoint. Look at how much you have to spend on security as a business.
I think most businesses spend, I think security is in the top five for line items in terms of operating expenses for most businesses. So it is significant. But
Yeah,
what I've noticed, Kalila, is that murders are down in 2025 compared to 2024. But the same was true for 2024, so it's actually a trend.
mm-hmm.
So 24 was less than 23, and 25 is less than 24. So that's encouraging. I know the Firearms Act would have had an impact on that, and the anti-gang legislation, and the government seems to be very tough on crime, from the standpoint of gangs, and having gangs become less prominent. We don't hear about one order and those gangs as much anymore compared to 5 and 10 years ago. So we're starting to see a paradigm shift, and I hope it continues.
I hope so, because that's
Yeah,
been one of the main things keeping Jamaica back. When you think about it, Julian, it also deters investors, foreign investment, because who wants to
yeah,
put their money in a country where the people aren't going to be safe,
yeah.
right?
But Kalila, I know this isn't a political program, but I want to encourage the viewers to vote, because, and it, I mean, whichever side you vote is up to you, fine. But many divisions are determined by 5 votes, 6 votes, 8 votes, 12 votes. So every vote counts. That's number one. Number two, I've been talking with some of my colleagues, and they've said, boy, they don't want to vote because of the corruption and all of that. But the key to get accountability is to not step away from voting, but to lobby. So OUR and Office of the Contractor General, and writing to the relevant channels. For example, the trade unions. These are ways you lobby the government, and these resources are sometimes not utilized enough. I don't think we have enough of a lobbying culture in Jamaica. But to get the government to act, you try to lobby the government. So not voting is not going to cause them to change their behavior. You get change behavior by lobbying. So what actually happens when we don't vote is that we allow other persons to vote on our behalf. That's just how our political system is determined. Even if you disagree with that perspective, that's actually what happens. So if I don't vote, what happens is I give up my opportunity to determine the government, and now Kalila is going to select my government for me. I don't want that to happen, even though Kalila is my friend. I need to choose my own government. So I just want to encourage the persons online who are not sure. Make a decision. It makes a difference. The margins are very slim sometimes, and every vote counts. So go out there, read up, listen to the debates, make your decision, but don't step away. You should try and lobby. Stepping away from voting is not going to change the government's attitude, and it's not going to bring the result you want. What you want to achieve is through lobbying, not through not voting.
Agreed. Well, thank you so much for spending the entire evening with us today, Julian. Your perspectives are much appreciated.
So
And
much
thank
fun.
that whole breakdown of the banking stocks, that was needed. We needed that comparative analysis. Julian
Anytime, Kalila.
Marston, founder of Wealth Watch JA. We're going to take our final break and come back with some of your comments.
This segment of Taking Stock, The Analysts, was brought to you by JMMB Group, your best interest at heart.
What? It's in the budget.
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 Download my free budgeting template at buildyourbudgets.com.
Welcome back. Let's take your final comments. Mario says, everyone should vote. No, shouldn't be an option. Warrell says, when the voting process becomes digital or online, then maybe I will, LOL. Philip says, NVIDIA was a great call. Sadly, QWI didn't buy more over the years. And we have Rasheen weighing in on that, or he says, or buy an ETF, which is invested heavily in NVIDIA. We heard Julian mention that strategy as well. Nigel says, still feel AI will have a tech bubble moment like 2000s, like the early 2000s, the dot-com bubble. Roswell says, it's a race with these companies on AI, just like Microsoft in the early days, booming, then a balloon. Philip says, one main event. in response to the general election being called. So main event looking to make some money during this season. Rasheen says S&P 500 is becoming too concentrated. 40% of the index is led by only 10 stocks. Ooh. D says, I'd take a bus if it's more reliable and comfortable. Would you? Would you guys take the bus if it's more reliable and comfortable? I feel like there are days when you don't feel like driving. I mean, when I lived in New York, you take the subway all the time because it's reliable for the most part, fairly comfortable. You know, you can get a train, you just stand there for a few minutes and one will come. Worrell says, I agree with that perspective on transportation. Ryan says, Kintyre is my election stock. Those display boards are going to be very busy. That's true. D says, we need a lot more well-thinking Jamaicans to vote, else it's the not so well-thinking ones who will vote and put us all in more problem. Shells wants to know how people overseas can vote. The only way you can do so now is to come home and vote. I don't think that there is a mechanism to mail in your vote. You have to physically come and vote. Daniel says, we must remember that financial crimes and theft are just as bothersome as murder and gun crimes. Some of these crimes often lead to murder and shootings. That's true too, Daniel. Great point. So thank you to everyone for weighing in this evening. Thanks to all of you who tuned in, to our guest, Julian Morrison, to our hardworking production team led by Sachelle Williams. You have Alexa Roberts editing and Israel Ramsey in the background. Who else do I need to thank? Everybody. And reminding you as well, you can get the Money Mission workbook on Amazon.com. The link is in the description. Fontana should be restocking soon. I heard that they still have some at Fontana Ochi. And don't forget to join the Money Mission so you can get access to all the courses and materials. Go to moneymissionja.com to sign up. Follow me on Instagram, Twitter, and TikTok at kalila.money. I don't have any backup accounts. And we also just got the @MoneyMediaJA on Instagram. We just got that page verified. So that now has a blue check beside it. So you don't have to be worrying about, is this a legitimate page? Who am I communicating with? Hopefully someday TikTok decides to give us a blue check as well, because a lot of scamming is going on over there on TikTok. So just please report the scammers and the impersonators whenever you see them. And now tell a friend about taking stock, because investing is the new sexy. So let's make it cool to talk about money. I'm Kalila Enriquez Reynolds. Thanks for watching and see you next week.